can only process about 7 transactions per second. That's not a bug, it's a feature. The base layer is slow because it's secure. Every node on the planet verifies every transaction. But if you want to use Bitcoin for everyday payments, smart contracts, or DeFi, you need something faster. 4 major Layer 2 ecosystems on Bitcoin right now. Lightning Network for instant payments. Liquid for trading and asset issuance. Rootstock for Ethereum-compatible smart contracts. And Stacks for decentralized apps with Bitcoin finality. 4 different approaches, 4 different trade-offs. Let's break them down. Network is the oldest and most battle-tested. Payment channels between parties routed through a network of nodes. Instant, near-zero fees, and fully peer-to-peer. It doesn't add a new token. It doesn't create a sidechain. It's Bitcoin moving through Bitcoin channels. Today, Lightning handles over 5,000 BTC in public capacity and has more than 15,000 active nodes. It is a federated sidechain. Instead of proof of work, it uses 15 functionaries, exchanges and infrastructure companies who collectively sign blocks. Liquid's killer feature is confidential transactions. Amounts and asset types are hidden. It's used heavily for trading, inter-exchange settlement, and tokenized assets like stablecoins and securities. Over $2 billion in assets have been issued on Liquid. Rootstock, or RSK, is a smart contract sidechain merged mined with Bitcoin. That means Bitcoin miners secure both chains simultaneously, and over 60% of Bitcoin's hash rate already protects RSK. The big sell here is EVM compatibility. You can run Ethereum Solidity smart contracts secured by Bitcoin's proof of work. No new consensus mechanism. It takes a completely different approach. It uses proof of transfer. Instead of burning energy, Stacks miners spend Bitcoin to mine Stacks blocks. They send BTC to Bitcoin addresses, and the protocol randomly selects a winner. This anchors Stacks directly to Bitcoin's security. Stacks transactions settle on Bitcoin. The Stacks blockchain is a historical record, but Bitcoin is the source of truth. How do they compare? Lightning is the fastest and cheapest, but can only do payments. Liquid has privacy and asset issuance, but you trust 15 functionaries. Rootstock has full smart contracts and merged mining, but it's a separate chain with a two-way peg. Stacks has Bitcoin finality through proof of transfer, but it's the newest and least tested. Every Layer 2 trades something for something else. Framework that matters. Trust model. Lightning is trust minimized. You hold your own keys. Liquid requires trusting the federation. Rootstock requires trusting the peg. Stacks requires trusting the proof of transfer mechanism. The closer you get to full smart contracts, the further you move from Bitcoin's native trust model. That's the fundamental tension in every Layer 2 design. In practice, these Layer 2s are not competing. They're complementary. Lightning for coffee payments, Liquid for institutional trading, Rootstock for DeFi applications, Stacks for consumer apps with Bitcoin finality. A user might hold Bitcoin on Liquid, use Lightning for daily spending, interact with a Rootstock DeFi protocol, and log into a Stacks app, all in the same day. Next wave is even more interesting. BitVM is bringing optimistic rollups to Bitcoin. Zero-knowledge proofs are being researched for Bitcoin native verification. RGB and Taproot assets are adding asset layers directly on Lightning. The Layer 2 landscape is going to look completely different in 2 years. And Bitcoin's base layer, slow, secure, 7 transactions per second, anchors all of it. Bottom line, Bitcoin's base layer is not meant to scale. It's meant to be the foundation. Layer 2s are how Bitcoin becomes a global financial operating system. Lightning for payments, Liquid for assets, Rootstock for smart contracts, Stacks for apps. Each one attacks a different problem. All of them settle on the hardest money ever created. If this was useful, zap some sats. Lightning address is on screen.